Hi, this is Jiamin, investment analyst from PC Financial. We just released our outlook for the first quarter of 2021, and one of the key themes that's underpinning our investment call would be a weak US dollar. So we do expect the trend of a weak US dollar to persist at least for the first quarter of this year due to a couple of reasons. Number one would be a low interest rate environment as well as the US twin deficits. So the US Fed Reserve is likely to maintain a very accommodative monetary policy until its goals of inflation rate as well as employment goals is reached. So we can expect a near zero interest rates to persist for some time. And on the deficits, the US is likely have to borrow more in order to finance its twin deficits, which is a record high fiscal and trade deficits. So the market is betting that the US has to print more dollars in order to finance these two deficits. And number two would be, of course, an improving macroeconomic outlook. So the US dollar is not just the world's reserve currency, it's also known as a safe haven currency. So given the improvement in the global macroeconomic outlook, we can expect the demand for US dollar as a safe haven currency to be much lesser compared to last year. So a weak US dollar is certainly beneficial in some ways. And one, it would definitely benefit the emerging markets, which would include the bonds and equities. And number two would be commodities. So for the emerging markets, a weak US dollar plus low interest rate environment will certainly boost investors' interest in emerging market assets. And as a result, would be also boosting the performance of emerging market currencies. So within the EM space, we are bullish on China. As for commodities, as commodities are priced in US dollars, so a weak US dollar would make commodities less expensive to users of other currencies. And for commodities that benefit from both a weak US dollar as well as a recovering global economy would be base metals. With that, I end my presentation for today.